Welcome to Stocks in Translation, Yahoo Finance's video podcast that cuts through the market mayhem, the noisy numbers, and the hyperbole to give you the information you need to make the right trade for your portfolio. I'm Blikre, your host, and with me is Yahoo Finance senior reporter Allie Canal, who's here to connect the dots and to be that bridge between Wall Street and Main Street. And today we've got a former pit trader as our featured guest who's sharp with market technicals, and we're going to be tackling all the recent market action as the shutdown drags on and earnings season picks up. Our phrase of the day is commodity futures. Our guest spent 14 years in the COMEX pits, and we're going to get her take on the story being told by gold, set for, by the way, its 49th record high of 2025, and crude oil, which is flirting with four-year lows. And on today's Market Show and Tell, our guest is bringing in her extended family, what she calls the modern family market analysis, from grandpa and grandma to big brother and sister. And this episode brought to you by the number 20.5%. That's how much tech profits are expected to grow from last year in the third quarter. How much is this still a Mag 7 story? And without further ado, we are welcoming Michele Schneider, a veteran floor trader turned chief strategist over at MarketGauge. She is the author of Plant Your Money Tree and has one of the sharpest eyes for chart patterns and technicals in the biz. She is a Yahoo Finance regular, but this is her first appearance on Stocks in Translation, and we are incredibly lucky and excited to have you here. Thanks. It's great that you could finally make it out here.
What a great introduction. Thank you, Jared and Allie. It's so wonderful to be here.
How about your big picture market analysis for us? How do you see things going right now?
Well, we may be in our late stage innings of the bull market, but that doesn't mean that we're anywhere near the end, right? And so right now, the fact that we have lived through rising debt, government shutdown, tariff news, possible cockroaches in the credit market, and we bounce right back, just shows you the resiliency of this market. And so right now, you have to be a bull because those who've been trying to pick a top have not been happy.
Yes.
Yeah, it seems like if it's a down day, it doesn't stay down for too long. And that brings me to our phrase of the day, which is commodity futures. Now, these are standardized contracts that let you buy or sell a commodity. So think gold, oil, or even coffee at a set price on a future date. Now, producers and end users turn to futures markets to hedge against price swings, while traders use them to speculate, helping to deepen the market by adding liquidity. Now, futures can be highly leveraged and risky, but we're now seeing more ways for everyday investors to access them through ETFs. So, Mish, what does this shift look like for you, especially as someone that's really been elbow to elbow with traders in the COMEX pits?
Well, I think the whole advent of ETFs has been amazing for getting mainstream investors. And I still feel, though, even at this point, a lot of commodities are ignored. I mean, for example, even though people had access to buy something like gold through GLD or silver through SLV, really it's only been recently that we're starting to hear mainstream people talk about it on the media. And yet, that's been spectacular. In fact, Jared, I can remember you and I talking 3 years ago.
We did a webinar, I think.
Yeah, and also I was live with you in the studio in front of charts, and we pointed out gold.
Yes.
And so here we are. It's literally doubled.
You were an early bull in the gold trade. I will say that. You know what? One of the things, and we can break this down real quickly, I noticed in GLD, and that's the ETF for gold, one of the bigger ones, there is a bearish engulfing candlestick. And I love candlesticks. They kind of tell a story. But I'll tell you what, despite the name bearish engulfing, gold is right back up there today, and it is just shrugging off news. What do you make of this chart pattern and just the market in general?
Well, you know, it's funny because we were talking about Dan Ives just recently brought up a Mae West line, too much of a good thing can be wonderful. And I think that's what we're seeing in gold. But, you know, from a more serious standpoint, one has to ask, why would the metal ignore so much something like a bearish engulfing? It had a huge drop last week. And obviously, there's some real good fundamental reasons to be long gold. And number two is, what is it really saying if you're looking at it as a mirror, a reflection of the cracks underneath all this euphoria?
Yeah.
So what could derail this record run in gold? Is it a recession? I mean, it seems like central banks also around the globe keep buying a lot of gold too. That's propping up the trade.
I always say what would break the back of gold would be if all of a sudden we greatly reduced our debt, not happening yet, and peace broke out in the world. We've had hints of peace, but hardly at the point where gold could say, okay, there's no more real crisis. And of course, our trade relations have been stressed. And we know that one of the biggest buyers of gold has been China. So I think there would have to be a major shift in that people would start to relax about these cracks becoming much larger fissures in order for gold to actually start moving down again.
Before we get into market show and tell, and we're going to broaden this markets discussion, I want to ask about crude oil because, as I said in the intro, almost down to 4-year lows, 55, closing around $55 per barrel. That's huge. What do you see there?
Well, there's a few thoughts on that. Number one is the mainstay of commodities is supply-demand. These are raw materials. They're not stocks. They're not companies.
Good point.
Right? So what makes a raw material interesting is when you have a shift in the supply and demand. And right now, there's been a lot of talk about an oversupply of oil. We also know from a political standpoint, not to get political, but we know this administration really wants to drive the oil prices lower. What kind of deals they might have made along the way has certainly influenced how much oil is out there. But here's the other side of the supply demand. It's kind of like the housing market in a way, right? If you get so much oil and the prices get too cheap, then you start to see refiners stop refining, drillers stop drilling, because they cannot afford to operate.
They're not incentivized to operate. Sure.
Right, exactly. So now all of a sudden, if you get any kind of pullback in terms of the supply and rise in demand, which could also happen for a myriad of reasons, not the least of which is that AI data centers need energy, and oil is certainly, as far as I know, a source of energy, along with natural gas. That's where you can see the shift. So a lot of people, including myself, have been waiting for that to happen. But now, just in terms of the timing, it looks to me like we're not going to see a shift in terms of supply demand, possibly into 2026, when we're talking about crude oil.
Right. I want to shift gears a little bit, and it is time now for market show and tell. Today, our guest, Mish, you have brought something to share, and it is your modern family market analysis, which features different ETFs and different family roles. And rather than me laying out, I'm going to let you do the heavy work.
Well, yeah, when I was a commodities trader, as you said, for so long. So when I got into the world of stocks and economics, I had to have a way to explain to myself not just what was important to look at, but the relationships and how that impacted the market. And as I was thinking about things, I started to realize that like the Russell 2000 was almost like the grandfather of the U.S. economy,
like that, yes.
Right? And so I created a character to go with that. And then I thought, oh, retail, well, that's 70% of the gross domestic product. And that was like my grandma who got so happy when she would go shopping. And then from there, transportation, obviously, the Dow theory is still very much a thing, became a character. Semiconductors obviously has been the Wonder Woman, sister semiconductors of the whole. And now all of a sudden, big brother biotechnology is waking up, which is great to see because that could be cyclical and non-cyclical. Regional banks, and that's so key to the family because we saw regional banks starting to fail last week before we saw that.
Little scare.
Even though, the little scare, the one or two cockroaches. And then, that's all of them. But I added cryptocurrency as a character as well.
Who's the cryptocurrency character?
Well, it's big. It's really Bitcoin bro.
Bitcoin bro.
Bitcoin bro, yeah.
Very appropriate.
Yeah.
So what is the family structure telling you right now? You're big into technicals. What do you see playing out in the near to intermediate term future? Well,
clearly we're seeing the small caps have a nice little pop here. They were higher than they are right now, but nonetheless, they did not fall apart the way that, say, regional banks did. To me, the most interesting, and probably if we had to pick one besides semiconductors, because you don't want to see semiconductors fall. That would really hurt the whole market. But you have to watch Granny Retail. She's always been my favorite character because if the consumer is not buying, we know things are going to turn uglier. And right now you have a niched kind of a consumer market. There are areas that people aren't buying, and some people are just really basically on the lower end of the economic spectrum going more for staples. But nonetheless, there's still a lot of money being spent by the wealthiest. And so XRT, that's the ETF, speaking of ETFs, in 2021 made a high of about 104, and it's only trading at around 85, 86. I haven't looked at the recent number today, but that's still a great distance from all-time highs as we're making all-time highs.
Sure. So a big laggard trade.
Exactly. And I think you have to keep your eyes on that in particular, because at what point, the expression I like to use is, what point does a weak link become an anchor?
Oh, interesting.
And it does remind me of something I just wrote about, which is how the entire economy seems to be levered to AI, which ultimately is unproven. You were just talking about those wealthy consumers propping up the economy. They're propping up the economy because their portfolios are doing well because of AI. So
Virtuous cycle here.
Yes, a circular trade, which we are seeing with the AI giants themselves funding each other's growth. So how concerning is that concentration risk for you? You mentioned that quote, sometimes too much of a good thing is a good thing. I guess when is the point where we start to second guess the nature of those trades?
Well, that's a great question. So one of the concerns that I read was that the capex right now of the biggest companies like Google and Amazon and Meta and Oracle is about $800 billion, and they can absorb that. But OpenAI and some of the smaller companies are trying to compete at a much lower level. And what they count on is the consumer to buy some of their products. ChatGPT, right? You get a free version of ChatGPT, but there's also a paid version. And a lot of these new softwares coming out, you have to pay for. So that's where the consumer comes in. What could absolutely hurt would be if at some point they cannot keep up with the spending that they've had because they're not really being able to engage consumers to buy things that they're creating when they can get them for free somewhere else.
We call that rubber meets the road.
Right. So like moving beyond just the B2B side, which we're seeing in terms of the investments and really embracing the consumer into AI adoption, do you think we're there yet? It feels like there's still a long way to go. And we were just talking about Apple hitting a record high. One of the reasons they've been a laggard this year is because they haven't been able to connect to the AI story. And part of the reason, at least from my perspective, is because their story is so tied to the consumer. And we don't really have a ton of use cases maybe yet on the consumer side. Do you agree with that?
I do. I mean, people will say all the time, oh yeah, I use AI every day. I use ChatGPT. But we have to really see how much further people are willing to go. And there are so many companies that are introducing AI as a means to make life easier. I mean, right at this point, basically, biotech is really what I'm focused on because how much easier it's making diagnoses, access to client files, et cetera. But we'll have to see. We don't know. I don't think I know the answer to that yet. That's why I like to watch, going back to my economic modern family. KRE gave us a hint that maybe it was time to stop buying, take some profit and buy a dip, like today would have been the day on the open. Today being Monday, of course. So it's going to be the same thing. If you watch the rest of the family, semiconductors would have to really have a major reversal, number one. And number two is we would have to see really XRT start to fail the 50, which it's done a couple of times, but pop right back, fail and not recover, because then you're going from a caution to an actual trend change. That should be paid attention to. But we're not there yet.
Actionable. I love it.
All right, well, we need to take a short break, but coming up, we're talking big tech earnings and a runway showdown between the vanity trade and the AI glam. You don't want to miss it. Well, this episode is brought to you by the number 20.5%. That's how much Wall Street expects tech earnings to grow in the third quarter compared to last year. By far the fastest of any sector. That's according to Bank of America. And if you zoom out to the core AI sectors, tech plus communication services, together they're on track to drive about 64% of the S&P 500's total earnings growth this year. So Mitch, it's not all about AI, but AI is definitely a big slice of the pie here. So when you look at the future of earnings, especially heading into the end of the year, what are your expectations?
Well, again, we have another divide, as you mentioned. So we have Mag 7 looking at north of 17% in terms of earning growth. And we have the other 493 looking at about 6 or 7% of earnings growth, which is actually good because at least
you point out as positive.
Yeah, that is a positive. Growth is growth. But at the same time, I think that, like I said, we have to really watch, the CAPEX, number one, especially of the companies that don't have meta money, if you will. And secondly, though, we also have to look for the new opportunities, and that's what makes it so exciting. Where are we branching out in the world where AI wasn't necessarily a factor and now becomes a factor? So biotech we mentioned before. I know, I'm not sure if this was the right time you wanted to bring up the vanity trade.
Yeah, go for it.
Okay, well, so one of the things that's happening because of the diet drugs, and I like the diet drug companies, Novo Nordisk and Eli Lilly in particular, but even Viking Therapeutics, because I do believe that regardless of what happens, whether we wind up in a recession or not, is irrelevant to the population. There's a 38% obesity rate in this country alone. If you take just a small fraction of them that have more affordability and availability to get on a diet drug, people are doing it. I mean, if you see people at a party you haven't seen in 3 months and they've lost 20, 30 pounds, you could pretty much guess that there might be GLP-1 involved with that. So then what I'm saying is that, so now what happens to this new, what I'm calling thinner consumer? And so that's where AI is coming in. Like, so for let's example, you want to see yourself thinner. AI can actually take a picture of you now and reduce your weight by X amount of pounds. So you can see what kind of makeup might I wear? What kind of clothes might I wear? Ulta has a thing now where you can change your hair color. I want to see what I look like as a platinum blonde, you know, that kind of thing.
I could waste a lot of hours on these filters.
Too much of a good thing.
But it is all about the glam. And what's so exciting, it's almost like, it makes a lot of sense that as we're seeing all these young people making money with their Robinhood accounts and buying Bitcoin and really basically following the Reddit flow of stocks in AI, we're also seeing more and more people actually being really open about the fact that they're on the diet drugs and what it's doing for their life and their skin and nutritional habits. We're seeing fast food stocks go down while we're seeing healthier options go up. You know, I think this is really, really exciting, not just through AI, but as a real culture shift for people who yo-yo dieted but never had a way to sustain weight loss. They're going to come out big and they're going to spend money because they feel good.
That is an amazing AI use case that I hadn't thought about personally. When I think AI derivative trades, I think utilities, and you know, of course, there's all kinds of things that go into the data centers, like power generation. And what about some of these? I'm almost going to call them traditional AI derivative trades, even though we're just kind of newly into this space. What about some of those?
Well, certainly, I love to look at the infrastructure as a commodities trader. It's kind of like raw materials, right?
Sure.
And clearly we need energy and utilities to run the AI. And even though oil has been under a lot of pressure, natural gas keeps trying to pop. And so if you're looking at natural gas right now, it's been trying to pop back up over 350. It goes back down to around 3, then gets back to 350. That is actually something we have in such excess here in the U.S. We're high natural gas, especially where we live in New Mexico in the Permian Basin. And I'm looking at other forms of energy, like, you know, Constellation has been a great trade this year. Nuclear energy, of course, we've been in uranium forever. So I think it is important, and they're talking about projections of like demand going crazy in just 4 years from now with AI data centers. I think that's a really good place to look, and all of the areas that would conduct the energy to the AI centers as well, some of that other infrastructure.
And when we're talking about commodities, one thing that's made headlines is just the rare earths, and that's obviously central to U.S.-China trade relations. What's your expectation on rare earths? Is this something that we can start to mine on our own or maybe partner with allies, or where do you think this goes from here?
Well, again, let's go back to supply and demand. So right now, we did not have much supply here in the United States, even though MP Materials had their SPAC introduction years ago. I think it was like 2019, maybe 2020. I can't remember exact date. And a SPAC, you know, at $7, now you're seeing that thing go crazy. So I think that clearly the stocks may be going up faster than we actually can switch from producing outside of the U.S. into the U.S. However, we do have capabilities here. And so California mine is where MP is, and I know in Nevada now they're looking at rare earth. I think I mean, you can't run all of this without rare earth, so it's not like the need will go away. But I think you have to kind of watch the balance again of things getting a little bit too frothy ahead of themselves before we actually have the ability to produce them in the U.S.
We got to do a hard pivot now, just a few minutes for Hollywood's favorite gab show, Derivative. We're going to call this Who Wore It Better. On today's runway, we're pitting the vanity trade against AI glam. So on the left catwalk, health and beauty names strut with new confidence. Think wellness, weight loss meds, and a whole lot of self-care spending. That's your vanity trade. On the right, AI superstars. They own the spotlight with data, chips, buzz. You know who they are. With all the focus on AI, it's easy to forget that GLP trailblazer Eli Lilly beat out 5 of the Mag 7 names in the first 2 years of this bull market when it shot up 180+%. But today, Mish, we're asking you about the current market environment. Does vanity outpace the machines, or does AI steal back the spotlight?
Well, I like to bet on the tortoise rather than the hare. So if we're looking at vanity as the tortoise, I think eventually, because it does actually change society, besides looking at a computer or a phone in a real way. And I also believe that it'll be good for people who have been so used to sitting at home looking at their AI instruments to help them produce whatever it is they're producing in work, go out and mingle more. And so I'm going to root for that.
All right. Excellent choice. And guess what? That kind of does it for our time here. Brief recap, though. I want to dial back to the beginning. We opened up with our phrase of the day, commodity futures. We talked about that gold trade, and it is just astounding to me to see gold poised for another record close after that big bearish candle that we got Friday. But nevertheless, that is a bull market in force. And then just thinking about the players in market show and tell that we had and the family, I'm always going to think of grandma as XRT and grandpa as the small caps, IWN. And guess what? Small caps are doing pretty well recently. And then you put it all together with the new vanity trade, which, by the way, is an AI derivative trade that I'd never heard about before or never thought about before. Very compelling stuff. And Mish, so thankful to have you back on the YF Network and on Stocks in Translation for the first time. So that's going to do it on our time today in Stocks in Translation. Be sure to check out all our episodes on the Yahoo Finance site or mobile app, and we will see you next time on Stocks in Translation.